Indiagrid, who's joining us today to talk about the fundraise plans and the roadmap from here on. Harsh, thank you very much for joining us. Talk to us about the preference issue which you are planning. Who are the investors who have shown interest and would be participating in this pref issue?
So overall, we had targeted to raise around 1,500 odd crores, which included pref and QIP. Right now, we have just finished one leg of pref issue, which is around 403 crores. And it is done at a price of 131 rupees. And we have marquee family offices who have subscribed largely. So family office like Serum or similar industrial houses. Those are the people who have subscribed that.
Right. And Harsh, I also want to know just in terms of the usage of these funds, where are we going to be using it as well?
So this capital we are using to fund the recent acquisition that we just closed last month, which is around 4,000 crores of renewable portfolio. So we'd acquired that and now we are just funding that for that portfolio.
Okay. Harsh, tell us, going forward, would you look at raising further funds? Will there be requirement after this recent acquisition, or for the moment you'll be done?
Yes, we are looking to raise further capital, and the end use will be towards funding the recent acquisition. And we would look to explore between preference issue or QIP, both as almost similar guideline, but different investors can participate in different issuances. So we may do both or we may do one of the both.
And also, what is the incremental cash on books and the average cash on books that you have as well?
So the last borrowing we did for the recent acquisition, our weighted average cost of borrowing was sub 7.5. And we believe that incrementally, we don't need any more debt right now, but incrementally, with the inclusion of India in the JPMorgan bond index and other developments, we do see further reduction in terms of spread. I mean, I don't think the G-Secs are going down anytime sooner, but the spreads might reduce a little bit. But I think on our weighted average portfolio side, there is very little refinancing that is coming in. So we wouldn't be impacted much in the next couple of years.
Harsh, what impact of the JPM bond inclusion would be seen in the attractiveness of InvITs such as yours?
I think it's a very positive development in terms of India's debt capital market development. And we might see more flows coming in, which will overall impact and increase the liquidity of bond market and develop it in India. I don't think it's happening in next quarter or two, right? If it implemented in phases from July 24 or June 24, so it's going to be a year or two away. But bond markets do factor in certain events early on. But I think it's certainly a very, very positive development.
Also, what's the impact on InvITs and what does it do to the cost of borrowings? Could you give us more of an understanding on that?
I think InvITs or no InvITs, I mean, in general, bond market development will help both InvITs and corporates. And we will see its impact in the next couple of years. Basically, what will happen is spreads will narrow, right? In general, G-Sec spread will narrow, currency will stabilize. All of the positives will result into probably lower cost of borrowing.
Harsh, how are you looking at scaling up Virescent now that the acquisition is done? Would you stitch up more acquisition into the company? Have you lined up? Have you identified some names?
So Virescent itself is a sizable acquisition. It added about 17% to our asset base and about similar percentage to our EBITDA. So that's a sizable acquisition to our portfolio. Virescent itself has stopped existing because it's delisted. So for us, it's a portfolio of assets, not Virescent itself. But we will continue to look at acquisition both in transmission and renewable space. We are evaluating some, but nothing at a stage that it's binding a sign. So we got to wait for that.
Okay, Harsh, and just in terms of the battery shortage side, what is the plans over there as well for the company?
I think the biggest thing which is stopping growth of renewable energy beyond what we are doing right now is its intermittency. And for that, what is required is round-the-clock power. For that, what is required is storage solutions. which includes battery energy storage and pumped storage. And we do hear a lot about pump storage lately because it's relatively cheaper right now because the battery costs are higher, and therefore the per unit cost of pump storage is cheaper than battery cost. However, the scalability is limited, and therefore India will need to invest in battery technology, both in manufacturing and projects. I think over the last 1 year, it slowed down. A year ago, there was a bid in battery energy storage, but subsequently everything slowed down. The incremental bids are becoming technology neutral, which is favoring pumped hydro to some extent. But eventually, we'll have to put in more battery energy storage capacity, which is scalable. And only when scale comes, like for solar, the price also will reduce.
All right, Harsh, thanks very much for joining us and good luck forward with those plans. Take a short break on that note. When